look at what's holding up the entire market right now. So not the gold and silver market, I mean the stock market, the entire market. Hedge funds are running $830 billion of leveraged bets on US government bonds, some at 100x leverage. That's the Fed's own estimate, and it's double the size it was when it blew up the treasury market in 2020. Big tech has already shed $2 trillion in market value since October. SpaceX is down almost 40% from its peak. Actually, I think today it's over 40%. Actually, and something else about SpaceX, even AI debt is cracking. The 30-year SpaceX bond went from 6.7 to 7.3% in the last 2 weeks. I'll explain what that means. So a bond is what a company sells when it wants to borrow money. You lend them money by buying their bonds and they pay you interest, which is technically called yield. SpaceX bonds couldn't find buyers at 6.7% yield, so they had to raise their yields to 7.3% just to attract buyers. This is just one of the signs that shows investors are not wanting to lend to AI companies anymore because they don't trust that the AI bubble is going to keep on growing. And look, I don't know which domino goes first, and it doesn't really matter. The point is everything is levered and priced for perfection at the same time, exactly like 2008, exactly like the year 2000. Now, when it pops, I need you to know what happens to gold and silver because this is the final moment of panic point 3. Actually, this is the most serious one because this is where the final group of inexperienced people sell, and they have to watch gold and silver take off right after they sell without them. First, metals get dragged down with everything else. Why? Well, picture a hedge fund manager mid-crash. His tech book is down 40%, 50%, redemptions are flooding in, and the only thing on his screen that's still green is gold. So he sells gold. It's the only thing left with a bid. It's the only thing that he can sell. Multiply him by every levered fund on the street, and that's why gold fell 30% in 2008 while the financial system was literally collapsing. Every headline said that gold had failed as a safe haven back then. Then the Fed cut rates to zero and printed trillions. Gold tripled from that low. Silver went from $9 to $49, about a 5x in under 3 years. That's the sequence. The crash smashes metals for a few months, then the printer comes on and metals lead the entire recovery because suddenly everyone can't see what the dollar is actually worth. And honestly, I think this cycle is scarier than 2008 because in 2008, the US only owed about $10 trillion in debt. Today it owes $40 trillion in debt. So whatever rescue comes in now has to be far bigger. They have to print so much more money, and when they print, gold and silver fly up. Quick thing before you go, I've written a free guide called How to Retire Before 2036. It's a full 10-year plan for anyone starting late. Get out of debt, invest properly, retire on time. Free download, link in the description.